Hello to everyone. My name is Arthur and I'm CEO and founder of B2 Broker Group of companies. So we have been working on the market since 2014, and especially we started with the Forex industry. We have been developing a lot of different B2B software solutions for the Forex industry, and in 2016 we entered crypto industry. So since that time, we have been working on different white label solutions for enterprise clients, for corporate clients, and today I'm going to give my point of view on some very important questions in terms of white labels, to buy source code, or to what to run decentralized exchange or centralized exchange, enterprise blockchain wallet solution. So different aspects. So we can start. First topic, it's about our most frequently asking questions that we receive all the time, what to launch, centralized exchange or decentralized exchange. And of course, there are some pros and cons between all these two completely different business models. Let's elaborate on a couple of topics here. First of all, it's why decentralized exchanges, they still are very popular among traders, crypto traders, and especially very crypto-oriented users, because there are many decentralized exchanges where you can find arbitrage opportunity. What does it mean? It means that there is some difference between spot price and price on decentralized exchanges. So due to the complex algorithm and mechanic of decentralized exchanges, you cannot make the same price on the spot exchanges. So this is why decentralized exchanges, they are very good in terms of arbitrage, but at the same time, on centralized exchange, you can make a proper trading. Because on decentralized exchange, again, due to the different complexities, and especially it's very low, there's no even the normal order book on the pure decentralized exchanges. There are some decentralized exchanges, but they are hybrid exchanges. They are not pure decentralized exchanges, and their order book is better. But there is no good liquidity such as you can find on centralized exchanges. Also, another thing, it's anti-money laundering issues. And as you know, guys, the regulators everywhere, in every single country in the world, they started chasing all these decentralized exchanges, because all these decentralized exchanges are used by many hackers and some companies, people who try to make laundry and convert like stolen coins to another coin. So this is the problem. This is why all these QIT companies such as Chain Analysis, Crystal, and so on, they started marking decentralized exchanges as high-risk transactions in terms of cryptocurrency processing. So what else? Of course, on decentralized exchanges, there is no fiat pairs. And it's clear some of the exchanges, they started offering wrap tokens or coins. It's some kind of wrap on the token which is backed by fiat currency. But in reality, nobody needs that, because since you have stable coins, especially USDT, you can easily convert this USDT on any kind of exchange to any crypto, whatever you want. So this is why I wouldn't say that fiat pairs on decentralized exchanges make any kind of impact on that. This is why nobody cares about fiat pairs on decentralized exchanges. But of course, if you need to make a proper trading, if you need exchange your crypto to fiat, withdraw fiat currencies, then you have to go to centralized exchange. So so I can speak 1 hour about the difference between decentralized exchanges and centralized, but the answer from my point of view, what kind of business to launch if you really want to launch any kind of exchange, so better to launch both. Especially, I like the questions when some companies that come to us and ask about the solutions that we provide. They ask us, guys, can you help us to launch decentralized exchange? Guys, we don't need you. You can just copy your smart contract, implement it, and launch. Unless you want to make some changes and improvements. Of course, for this case, you need to hire experienced company or outsourcing company or just developers and improve your exchange. So this is why what I believe that anyways, all the industry is heading to the centralized direction. As you can see in terms of bank, payment providers, electronic money institutional companies, because even the big investors, the big companies, the real corporates, institutionals, they don't want to deal with any unregulated exchanges. They don't want to deal with decentralized exchanges. So this is why decentralized exchanges, they still remain as a underground environment. Of course, they will survive and they will be live many years. But if you want to run serious business, my advice to launch centralized exchange. And to run decentralized exchange is an option as an addition to your centralized exchange. That's my advice. So we are moving to the next topic. It's liquidity. So now it's one of the very important question because in terms of crypto liquidity, there are 5 different types of liquidity. As you can see here, spot margin, CFD, futures, and perpetuals. So what is the difference between all of them? Spot exchange mostly are used as a converter. So you need exchange Bitcoin to USDT, then USDT to Euro, Euro to Ether, Ether to Litecoin. So that's what you are doing. The advantage here is that you don't take any kind of risk. So you exchange one asset to another. Of course, depends on fluctuation, the price might drop, but still you keep your tokens. Another plus here that you can withdraw all these tokens, let's say assets, to your cryptocurrency wallet that belong only to you. You keep your private keys. Nobody can take your assets unless you use centralized stable coins on decentralized exchanges. As you know, centralized stable coins, they can block your addresses. Anyways, that's the advantages of spot market. Spot margin. So what does it mean? It means that you take some kind of loan. For example, you have on your account 100,000 USDT. You want to buy, you have available funds to buy two Bitcoins. Let's say price is 50K. So you want to take the leverage, 1up3, and instead of 2 Bitcoins, you want to buy 6. And that's why you have to take this loan. Of course, you got to pay interest for this loan. And even, for example, some exchanges, they offer some kind of synthetic staking where you can use your stable coin as a collateral to the liquidity pools from where traders who want to make margin trading on the spot exchange can take this loan and trade on your tokens. Of course, exchange share this interest that take from the trader between exchange and you as a provider of this collateral. Then CFD. So CFD mostly designed on the Forex space. It's a Forex CFD space, but it's very common and it's very popular in terms of traders. Why? Because if you want to trade margin trading based on spot, the logic behind this, it's much more complicated, especially in terms of liquidation of positions. But CFD is designed in a bit different way, where broker gives you leverage on any kind of CFD based on underlying spot assets. So what does it mean? It means that market makers, what they are doing, they are using spot price of any kind of crypto from spot exchanges and construct their contract for difference. So which means they use underlying asset as a spot market price and construct this CFD. The good thing here is that it works also 24/7. Many forex brokers, they are regulated, they are reliable. For this leverage, they charge you swap, but this swap is not very sufficient. And of course, it's a pretty simple trading product. That's why many traders, they love this product. Then futures. The futures, it's mostly for advanced traders, and especially crypto exchanges, many of them, they implement already futures. It's a very complex instrument, but it's good for the hedging. So you can, for example, if you have some kind of trading strategy based on spot market, and you do your buy, sell, long-term positions, what you can do with perpetual futures, you can offset the risk. This is why perpetual futures, this is pretty advanced instruments, but if you want to hedge or offset the risk of your spot positions, you can use futures. So you can do potentially opposite transactions. Then, perpetual futures. What does it mean, perpetual futures? Basically, perpetual futures was designed by exchanges because of they were trying to construct to make some kind of trading product which is very similar to CFD from the forex space, because don't forget, all the guys who launched the first centralized exchanges, especially if you even take a look on Binance, behind them, the team is from traditional finance industry. So this is why all that were they doing at that time, it was based on their experience from the traditional market. And this is why they wanted to create some kind of product which is very simple, same as like CFD, crypto CFD. But it's not CFD, because sometimes crypto users, they consider Forex and CFD brokers as not related to crypto industry, and they suspect these brokers in something wrong. This is why exchanges, not to be alike to these Forex brokers, they had to construct these perpetual futures. But the idea of these perpetual futures is pretty similar, but the logic is a bit different. So perpetual future, again, used as an underlying spot market, but because on CFD market makers, they create an order book. Here on perpetual future side, you trade according to order book based on exchange. And this is why, because you trade with the leverage, sometimes you can see the difference, like divergence between perpetual futures price and spot price. This is why exchanges, they implement some kind of funding rate. And if they see the difference behind this, it's some kind of very complex formula, but they adjust the positions. They try to charge for example, long positions and make adjustments on the short. That's why they try to compensate the difference between perpetual futures price and spot price. Okay, next topic is how to create your liquidity. This is also, we receive this question very often because all the exchanges, especially centralized exchanges who run their business, especially if they are newcomers on this market, they ask very reasonable question. How to launch my exchange? How to create liquidity on my exchange? And there are 4 ways how you can do that. The first one, it's organic way. This way worked maybe in 2013, 2012, 2015 max. So what does it mean, the first way? When you launch your cryptocurrency exchange, you start attracting users. And users, by placing limit orders, they fill your order book. That's how you create liquidity on your exchange. But of course, now, if you see exchange with empty order book, are you going, guys, to trade there? I think nobody does, right? So this is why the first way you can forget about that. But of course, I had to put it here just for your information. Then, market maker service. This is actually original idea of creating liquidity on exchanges. Because don't forget that if you compare brokerage and exchange, the brokerage platform designed to receive the order from the user and pass this order to liquidity provider or to any kind of liquidity source, which means you acting as a brokerage platform, you don't take a market risk. Actually, you try to offset every position and you use a pre-execution type of model. This is why you take the order, you pass this order to liquidity provider, you receive confirmation, and only after confirmation you send this order to your user. You confirm this position, this trade to the user. On spot exchange, there is matching engine. And matching engine works when you have your order book. So you have your order book, and when any kind of user, taker, maker, they place another order, and this order match with any order among these orders on the order book, immediately order gets executed. So this is why when you attract market makers, their goal to fulfill your order book on your exchange. That's their job. Of course, there are also two types of market makers. The first type of market maker is the very well capitalized company who has good balance sheet, and they can come to your exchange and say, hey, look, we are ready to make a liquidity for 10 pairs on your exchange. But we expect from you certain amount of users, we expect from you some certain amount of generating minimum monthly commissions. For example, $10,000 at least. So, which means no matter how many users you have, you must generate $10,000 commissions to share these commissions with market makers. This is why there are on the market another type of market makers, and they don't have a very good balance sheet, and they say to you, look, we are not ready to put collateral on your exchange. You give us credit, so you credit some funds on your exchange, then we trade against your users. We take, for example, you take from the takers 0.1%, and you share with us as a makers on your exchange 0.05%, which is like 50% of what you are making from the takers, you share with us as a makers. Okay, makes sense, right? But here's the trick, that all these guys, especially newcomers, they don't have very good balance sheet as the first type of market makers, which are pretty expensive. And this is why they are not ready to put collateral on your exchange. And when they start trading against your users, then what's gonna happen in case users made a couple of $1 million in one trading session? These guys might disappear. And so afterwards, you will have to start chasing them to get your money back, because you have your liabilities, right? Because you front your end users, and you have liabilities to these users. If they made $2 million, you gotta pay to them. You cannot come to the users and say, hey guys, my market maker disappeared and I cannot help you. Then they screw you. Of course, this option, it works, but you gotta be very, very careful with market makers who you deal with. So this is why before you start working, check all the conditions. The third way, it's a Marksman hub. So what does it mean? As you know, guys, since we came on crypto market in 2016 from Forex industry, we know how it works. We know how to make aggregator for the liquidity and how to combine this liquidity from different exchanges, create your own crypto liquidity pool and provide to your exchange. So that's why we built our Marksman hub. It's a first cryptocurrency liquidity hub on the market, and through this hub, since you launch your exchange, afterwards you can combine, you can create your own liquidity pool. How it works? Basically, it's a software solution. you have to open accounts on all the major exchanges such as B2BX, Binance, Coinbase, Gemini, Kraken, Bitstamp, Huobi, and so on. So you open accounts there, you connect your Marksman hub to all these accounts on your exchange, you put collateral on these exchanges, and then you can say, okay, Bitcoin USDT, my first provider, Binance, my second provider, B2BX. There is also function, it's called failover system. If Binance goes down or goes on a maintain, then system automatically switch to another provider. That's how you keep your exchange every time up and running. It's very crucial moment to have failover feature for every single trading product that you offer on your exchange. This way, it's a much more efficient because you don't need to pay no matter how much you generated. You don't need to pay to market makers every time like a minimum monthly fee. Here on exchange, you can open account, corporate accounts with B2BX, with Binance, Coinbase, and so on, and keep collateral there and aggregate liquidity from all these exchanges. And moreover, you can not only choose which pairs in particular you want to take from certain exchanges, you can also aggregate the order books. So, and the last point, it's ad-hoc connection. What does it mean? It means that potentially when you build your matching engine, you can connect your exchange to another exchange through this ad-hoc connection by using WebSocket and REST API. But the problem here is that you will not have this failover feature that I mentioned recently, because you gotta have every time backup for every single trading product that you offer to your users on your exchange. So what I'm trying to say here is that there are some certain options to choose how you're gonna construct your liquidity, but basically I suggest to you my personal advice to choose between the market makers and Marksman Hub as a liquidity hub. And also don't forget, when it's we are talking about spot liquidity, it's always post-execution model type of execution. What does it mean? It means that you always confirm the execution, the prices to your users because they trade by your order book. And then you try to offset your hedge position on Binance or any kind of exchange. And that's where risk is appear all the time. And sometimes you get advantage, but sometimes you will get loss on this hedging transaction. In terms of cryptocurrency processing, since are you going to, for example, launch your own centralized cryptocurrency exchange, you have to think about how you're gonna offer wallets, how you're going to build your own wallet infrastructure for your users, because you gotta provide to every single user, depends on the trading products that you're going to start offering on your exchange. You have to provide all the wallets, tokens, and you have to give to every user dedicated wallet for every single token and coin and stable coin, of course. And some of the users, maybe they want to generate new addresses, so that you have also to support this. This is why I just wanted to emphasize here what is the difference between merchant model, enterprise, and white label. B2B in Pay, it's also one of our branch, and we provide cryptocurrency processing solutions for enterprise clients and for the merchants. So what is the difference here? The merchants, if you are, let's say, any kind of e-commerce and you are selling any goods or services on your marketplace or on your website, then, and for example, you don't want to even touch the crypto. So you want to use crypto only as a payments for your goods and services. Then you need the merchant type. In this case, all the cryptos that you will be receiving from your users or from your buyers, customers, will be converted to the chosen target currency. For the enterprise users, such as crypto wallets, crypto brokers, and crypto exchanges, you don't need to convert this. You need to keep assets as is. This is why through one single comprehensive API, we provide access to all blockchains, tokens, and stable coins based on those blockchains. So another very important question here that we receive pretty often is what to do to take white label solution, to build your own in-house solution or to buy source code. So this is very complex question, but I'm not going to explain all the advantages and disadvantages here, but the point is that if you are a newcomer on this market, it doesn't make sense for you to spend 1 year to develop your own solution from the scratch. You can test out your business model, you can test out your ideas and just go with white labels. Because white label, it's a ready-made solution. For example, if you go to B2 broker booth and you want to run your crypto exchange, crypto wallets, crypto broker, forex broker, you can create liquidity. We're gonna set up, like we're gonna provide to you full setup in 2 months maximum. In 2 months you will be up and running. So time to market, it's a very, very important indicator of your business. That's why, you know, today crypto is very hot. It's very hot. Nobody knows what is going to happen tomorrow. This is why if you wanna launch your business on the crypto space, do it now. This is why my personal advice to take a white label. Then, while you will be working, you realize, for example, your business model is good. Then you can start hiring the team and you can start developing your own software solutions. Or you can even find source code, you can buy this source code, but be careful guys. Source code, it's a very, very tricky. If you buy source code without team and without proper documentation, then you will get in trouble. Then maybe you will need to throw the source code in 2-3 months. Sometimes it takes to build from scratch, sometimes it's much faster comparing to buying source code and try to redesign this source code. Of course, also just 2 moments about outsourcing and outstaffing. Outsourcing, guys, I know that a lot of companies, they offer outsourcing service to build your own exchange. But here's the trick, that they develop their own solution. And their rights on this solution will belong to this outsourcing company. This is why be careful when you work with outsourcing company. I don't want anything against outsourcing, but my advice to start with the white label, test out your business model, and then move to the source code, your proprietary in-house development, or even outstaffing. Okay, that's it, guys. Just 1 minute attention about our company. I really hope that information that I provided to you, it was very helpful for you guys. And I want to present B2 Broker properly also. Allow me 1 more minute more. So, first of all, we run our technology business and we provide white label solutions for the B2 Core. It's a back office system for any kind of business. It's a crypto broker, crypto wallet, crypto exchange, forex broker, and so on. Then B2 Trader, it's a spot matching engine trading platform for your exchange. Then Marksman Hub, you already know about this. It's a liquidity aggregator. So you can take this software solution and you can create liquidity and create this liquidity pool and put or stream this liquidity stream into your exchange. Then white label MT4, MT5. By the way, MetaTrader 5 now they redesigned the platform and now it's a very good platform to run your crypto CFD brokerage and to offer to your users, besides of the spot, to offer also marginal trading on the crypto CFD. Then we have our liquidity business. We have a license in Cyprus. We are European regulated prime of prime liquidity provider in Cyprus. Also we have license in Belarus. Now we are in the process of obtaining license in some certain jurisdictions that we will announce as soon as it will be ready. Of course, we have a license in Estonia, so we provide spot liquidity service for the institutional and professional clients. We do not deal with retail clients. We do not compete with our clients because our clients, they are professional and corporate clients. This is why we do not work with retail clients. And also, guys, recently we just secured the license from Central Bank Russia. And now we became regulated securities prime broker. And we are going to become a prime broker as a member on a MOEX exchange, and we will be ready starting from January next year to start offering securities liquidity, because we got spot liquidity, crypto, CFD, Forex, perpetual, and now we are heading to also securities direction. Of course, our payment business, we have a license in UK. It's an electronic money institutional license. And we are going to start offering banking solutions for crypto-related companies. So all the exchanges will be able to make transfers between their liquidity providers and their users among in one banking infrastructure. So it's going to be a very proper banking system. And of course, we offer our broker as a service. And last piece that we recently launched is our B2 Broker Venture Capital Fund. And we started looking for the good startups who are developing their software, and this software might be useful for our ecosystem. So guys, thank you very much for your attention. I'm glad to be here, and stay in touch. Be healthy. Bye-bye. Thank you.